All right. Hello, everybody. Let me tweet that I am live. We've got some data that's not that good. It's not the best. Let's just say that. It's not the best. I did not expect it to be the way it is either. I did not expect it to be the way it is. But it is the way it is. And I guess we just got to deal with that. So let me do that. Let me tell everyone I'm live. Oh boy. All right. Inflation is not coming down as much as we thought it was. I personally thought it would be bad. It's not bad. It's not bad. Richard, what's up? What's up? Jim, Haley, hello. Dr. Z, Uriel, Kane, Cameron, Richard, thank you for being here. Oh man, it is not good. It is not good. I really didn't expect it to be this bad. I thought we would get 7.9 and it rose 0.1%. It freaking rose 1%. It didn't go down on an annualized basis. It actually go up. Core CPI. So let's get right into it. Inflation rose 0.1% in August, even with sharp drop in gas prices. Consumer price index increased 0.1% in August, excluding food and energy. The inflation gauge increased 0.6%. Costs were driven by increases in food, shelter, Medicare services, offsetting a sharp decline in gasoline prices. Real average hourly earnings adjusted for inflation rose 0.2% in the month. However, they remained down 2.8% a year ago. Now, one of the reasons this is good, DJ the Dog, hello, thank you for being here. One of the reasons this is good is because if you've got dry powder, you've got a massive opportunity to buy the dip. And we're going to get into stocks in a second. I'd much rather buy SoFi at like $5 versus $6, right? Like personally, I actually think that's an opportunity here. But goodness, this is not good. This is horrible, which tracks a broad swath of goods and services, increased 0.1% for the month and 8.3% over the past year. So it went down from 8.5 to 8.3, but core went up 0.1. So technically it's at like 8.4, which means it didn't really do it. It didn't change, right? I mean, it changed to the upside, not to the downside, which is not good. Just sold it all, took an 8% profit, gonna hold cash for a while. I can't blame you, man. I cannot blame you for selling. Absolutely cannot blame you for this. This is incredible. Let's go into the stocks right now and let's see how stocks are performing. Let me just open up Webull. I didn't expect this. I mean, this just lets you know how wrong anyone can be about the economy. Almost every single analyst was like, it's definitely going down. The market's getting ready for this. And it's like, nope. It's all a sham. It's all down. So here we go. Everything, as you can see, is down. Look at this. DNA is down 6% pre-market. Path down 6%. Tesla down 4% pre-market. ARC Innovation down massive 6%. Like these are being down 6-7% pre-market is not good. Let's see Palantir. Palantir is definitely down. That means the Fed has to raise interest rates. Look at this. Palantir, wow, 766. It went to 8 yesterday, and now it's at 4.37. Neo had a 13% runner, down 4% today. S&P 402. Wow. S&P is at 402. S&P was like, yeah, we're not gonna play with this. 410 to 402. I mean, goodness. Glitch Life says CPI data was actually not that bad. To be honest, we are still trending down. We peaked, which is a good thing, but we still have rents, which will be lagging and keeping things high. Yeah, but it's not going down as quickly as we need it to go down. I mean, if it's increasing if the next month it goes up another 0.1%, right? Like core inflation, that's not good, right? The trend is like barely going down. And the peak is like, yes, it should have peaked, hopefully. But if it goes up, then it's not peaking next month. And I guess we're going to see what happens next month. But obviously, I think if the Fed raises interest rates, that's going to hamper it. But the problem is with the market, which is what I was talking about yesterday. I was like, it doesn't seem like we're out of the blue yet. the Fed's obviously got to raise some rates and get this thing under control. Look at Snap. Snap's down 5%. Snap can't afford to be down 5%. Snap is already hit. Robin, how did Robinhood get to 11? I always thought Robinhood was at 7 or 8. Robinhood's at 11. Bumble down 6%. Yeah, man. Where's SoFi? Let's look at SoFi. SoFi at 604. Oh, that's beautiful. To see, this is why I didn't put in all my money yesterday. If it drops to 5 to the 5s today, I'll probably pick up another, hopefully like 70, 80 shares. All right, the market will be opening in a little bit. I have my bell ready. If you're new to this channel, this is the one thing we do on this channel. We ring the bell as the stock market opens. We have about 10 seconds, and we will commemorate the United States stock market being open on September 13th, 2022. It's already September. Isn't that crazy? It's already mid-September. That's wild. All right. The United States stock market is open. It is so good. I don't have anyone home when I do this because they would be so annoyed if they were home. Wake your ass up. Let's get into the market, because the market is bad and it's not good because J Powell didn't do 100. If he had just done 100 basis points last time, maybe this would have fixed it. Maybe it wouldn't happen. Okay, Palantir 7.54, SoFi 606, Tesla 293, S&P, look at this, 401. We were just getting into this little rally for the S&P, right back down to the bottom. Apple 160. Apple's at 160. Apple's at 150 at some point. It's hard not to buy SoFi at these levels, but I'm tapped out. Totally feel you on that. You sound congested. I'm a little congested. I probably need to like drink some tea to get rid of the congesting. Tom's stealing your fire. Tom's doing a market open? This mother. Well, thank you, 94 people, for being here, even though Tom never does a market open. It's probably because of you. It's because of inflation. This mother. I should call him and be like, hey, bro, why are you doing the market open? Miyoko, thank you for being here. CNBC this morning announced it. Yes. All right. So look at it. The market's down. It's not great. But honestly, I'm happy for this in all seriousness, like actually, because I did not want to buy SoFi at $7. I'm very happy to pick it up at 608, right? It's 602 or 601. And if we can see this going down even further and further and we get it down below 6, like that's where I like it. S&P was not supposed to be at 410 anyway. Like there's no reason for that little rally we had yesterday. It's so insane that we had a rally, and every analyst, I watched a bunch of videos on CNBC on the market open yesterday that basically were like, oh, we know inflation's dropping like a rock. The market's going to already bake it in. It's a leading indicator, blah, 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 blah. It's like all of them were wrong. Every single one of them. None of them knew what the hell they were talking about. And they had convinced me that inflation is 7.9, blah, blah. It's like, no, bro. All of us were wrong. All of us were wrong. ARK at 43, down 6%. AMD down 4%. Snowflake. Roku at $68. Where's Snowflake? 183. It was at 191, so it's down a good 8 points as well. Alibaba at 991. Twitter, apparently people still think this deal is going to go through. Twitter's at 41 for some reason. That's one of the biggest mysteries this whole year. Google at 108. I wanted to pick up some Google. I don't want it at 108. I want it below 100. 108 I still think is a bit expensive given overall their growth, but it would be nice to see that. Everclear, thank you for being here. Zoom at a new low. Wow. Hold on. Let's go to Zoom real quick, and then we're going to get back into inflation. 79. Wow. Now, granted, this is I think Kathy's going to be buying a lot today. I think Kathy's going to be buying a lot of stocks. All right, let's get into CNBC. Let's see what the talking heads are saying about inflation, and then we'll dive deeper into the reports. Let's get into that right now. All right. Let's see what Jim Cramer has to say. Let's see his thoughts. I'm curious. He did say inflation peaked. He called it 2 months ago. Let's hear what he has to say about this one now.
Higher inflation here, Jim, than I think the market expected. I imagine you may have expected. I don't know. What do you think of this?
Look, I look at the futures and just saying buy. I mean, it's really incredible how you can try to roll back whole moves that have been put on for the last 8 days for a number that is why the Fed is going 0.75. Food is the leader. I don't know. Food could be stabilizing here. I question whether, after listening to Diana Olick's excellent report this morning, whether we're not seeing some relief in housing. We obviously saw relief in any sort of electricity. That's just per se. So we're looking at a company's stocks falling short, even as almost every one of the numbers I just mentioned will be lower 1 month from now. And I'm not concerned that the Fed's going to overdo it. That is a bogus thing. I mean, obviously, what I care about is that they stop this. We arrest things. We get it so that futures are not down 1.3.
Right.
I mean, what are we going to do? Is this the time to sell tech because of this number?
Well,
no, but that's what the market does.
Hey, Jim,
the
but I'll
market's
tell
so
you-
stupid, Andrew. It's painful.
Well, so Jim, we had Savita.
That thing that he said right there, the market is so stupid, it's painful. That is exactly what I agree with here with Jim. I mean, like every analyst was like, we're dropping, market's rallying. They already baked it in. No, it's stupid. It didn't know that. That's just what it is.
Romanian on from B of A, who I think is actually quite brilliant, and she has a view. You may disagree with the view. She said, I wouldn't own tech right now. She said, I wouldn't own the S&P 500 right now, was her perspective. She thinks the Fed is going to continue to have to raise interest rates. She said this before we got this hot number. And her view is own industrials, own energy, and basically you don't want to own maybe a little healthcare, but pretty much everything else sort of off limits.
Has she looked at the price to earnings multiples? Has she seen that the more than 40% decline in the semiconductors? Has she looked at the average one of these FANG stocks, which is now selling between 19 and 22 times earnings? Is she looking at any of the compressed multiples that are because of exactly what we're watching? I'm not quite sure. I'm an individual stock guy. And I know that NVIDIA on the board is that's 40 times earnings. The rest of these stocks are selling, most of them are selling Micron 6 times earnings, Advanced Micro 19 times earnings. The banks are big winners here. They've been winners here for weeks. No one seems to acknowledge it. People selling off. Why? Because there's a possibility that there's going to be an increase in defaults. There sure hasn't, and defaults are down as low as they've been. Look, if you look at the individual stocks, you just want to buy. If you look at the futures, well, get out.
But what's your sense of what happens to the multiple?
That game's over.
But isn't the argument that, look, if the Fed's
It's happened.
But the question is, it may have already happened. The question is going to continue to happen, or is it going to just even stay flat where it is if the Fed is going to have to continue to raise rates at this pace? I mean, part of it is this optimism in the market that maybe they won't. And I'm not sure that is true anymore.
Well, I mean, if you look at the futures that we're watching on the board, the optimism's gone. They've erased everything that we've had in the last 8 days. Now, does that make sense? Because of a 0.2 inflation, actually 0.02. The reason this is happening is because it looks like the Fed is somehow behind the curve again. This nonsense has to stop. We've had a great rally from the bottom based on the idea that we are seeing not peak inflation, but inflation that can be dealt with by the Fed. Diana Olick's report, which is about rents coming down, is completely ignored by this. The idea that the Dow should be down 1.5. I want to know which Dow stocks should be down 1.5. Which ones? Look, I just need a name. Give me one darn name that should be down that much. Are we going to be ruled by the futures, which have been wrong for the year? Are we going to be ruled by the individual companies, which are doing very well? You want to buy Disney at 113? Well, wait a second. No, I'm really worried about the Fed. I mean, what do you mean? I mean, what kind of broad brush action is that? This is not a Rothko. This is a Rembrandt.
We didn't get what we were hoping.
That was kind of epic by Jim. That was kind of epic. I'm not going to lie. That was kind of epic. All right. So we got SoFi at 601. I'm picking up $250 worth of it. Picking up $250 worth of it right now. Here we go. Review. That's 41 shares. There we go. Let's buy a little bit of this dip. Might even go lower, but that's okay. Let's get that right there. Boom. Okay. Beautiful, beautiful, beautiful. There we go. We're going to buy a lot more of this bad boy as it goes down. Wow, this is amazing. Also, Palantir new interview just came out. That is true. I'll probably be doing reactions to that later, but for now, we gotta talk about inflation. This is incredibly interesting. Kramer saying buy, and so the argument he made was like, okay, so Disney's at 113, you're not going to buy because of the Fed. He's implying there that inflation's really bad. He's implying that prices are oversold, and just because the Fed is raising interest rates doesn't mean you don't buy something incredibly cheap. I tend to agree. I think all of us tend to agree at that point, right? DCA into those positions. The question is just, and this is why I've not been buying over the past month. When the S&P was rallying all the way up to its little 430, then went back to 390, then rallying all the way up to 410. It doesn't make sense. I genuinely believe there has to actually be an actual crash, and we haven't had that yet. And all this stuff, playing with inflation the way we are, thinking that everything's okay, it's not. These numbers this month proved it's just not. It's just where there's going to be a lot more stuff we need to get through in order to make this good. And it's going to take time. It's not going to be easy. And I think that's why Jay Powell said expect pain. He was not lying when he said this is not. He probably knew, hey, inflation is not going to come good next month. I mean, I'm sure the Fed knows a little bit more about than us, and that's what's going on. All right, let's look at 4 other experts analyzing inflation.
Here, is it coming?
Well, we got winner chicken dinner, more expensive food prices. So it's every day in the grocery store. So I'm not surprised by the number at all. It's right in line with expectations, for me at least.
How about you, Mira?
Look, it puts pressure on the Fed to continue to hike pretty aggressively. We expected 75 coming into this meeting, regardless of the inflation print, though, because even if we did get cooler inflation, which we didn't, we still haven't seen that sustained trend of disinflation. So we're going to continue to watch out to see if we do see that. Moreover, we're still seeing that labor markets are tight and wage growth is solid. And above all, if we see that the Fed happens to have gone 50 basis points, we would have been in the same exact position we were this summer, where all of a sudden the markets are pricing in a Fed pivot that the Fed is not ready to deliver. So I think at least it keeps us in line with that 75 basis point hike we're likely to see later this month.
So Austin, just referencing some of the stuff Rick was saying, and maybe some of the stuff Jason Furman said. I mean, he's kind of like-minded in certain ways. Did you have any remorse about the student loan action, Austin? Have we spent too much? Is that part of what's going into this right now, and has it troubled you?
That's not going in this. As you know, I wasn't a big fan of blanket debt forgiveness of that form, but that the amount of money that goes in as stimulus from a 10-year debt forgiveness program is very small in this year. Okay. It's totally confused to say that the government spending is going up. Government spending is all compared to last year. It's actually shrinking by almost $2 trillion, the biggest drop in the deficit that we've ever had. So that's not what's driving these numbers. Now, we didn't get, I couldn't tell what the month-to-month inflation in the core was. It sounds like it was worse than expected if the year-over-year was up more than expected. But that's the thing that the Fed is looking at, because that's the only new information on the core. And if that's not coming down, I think forget about 75 basis points. That means we're going to be on a path that the Fed is going to be raising rates a lot, not just this meeting, but in multiple meetings.
So that right there is something now people are like, it's not just 75. Like what I heard from analysts yesterday, just yesterday, September 12th, 75 September, maybe even not 75 September because inflation is so good. And then 50, 25, and then they start to reduce rates. That's what I heard from all the analysts. And now it's like, actually, it's going to be 75, 75, 75. It might even be 100. Like inflation changes everything because it is a cancer on the middle class. I mean, it hurts everybody at the end of the day. And the Fed has got to do what they have to do.
Meetings going forward. So that's the thing we got to keep our eye on.
Austin, so I know we haven't spent the student loan, none of that's happened yet, but then go back a little bit to what we had spent prior to that. You don't think any of that enabled the Fed enabled a lot of fiscal spending at that point, and that's why we're all paying the price now with higher rate. You don't think any of it did that? You think it's all supply chain?
I think some of it did.
Oh,
no, okay. I think some of it did, but the argument that the inflation right now is being caused by too much government spending and stimulus is confused about how the accounting works. It works as everything compared to last year, and government spending is falling quite substantially. It's pulling GDP down.
Hey, Tyler, can I just ask
hey, Joe,
just about the wage increases? Just a second. Let me just ask about the wage increases in particular. Yeah. Looking at some of these numbers, I mean, we've been talking today about the railroads negotiating for a 14% pay increase that they would like to see more than that, I guess, on some other areas. We just talked about Hard Rock Cafe raising what they're going to be paying their workers. We've talked about California and the fast food law that's going to go in there requiring $22 an hour for fast food workers. I think the big question becomes what happens to wage inflation, because that's what always worries people about the wage inflationary pressures. Tyler, are you concerned about that, or is that something we still need to see more than just a few anecdotal situations?
Well, I think that's a good question. And certainly when we look over the past year and a half, a big challenge for labor has been that wages have not been keeping pace with inflation. And for most of 2021 into 2022, while that was true for the average wage, the average real wage, it was not true for wages in the aggregate for the economy as a whole. But that has changed in the past 6 months. And indeed, for 2 of the past 3 months, we've actually had the aggregate wage bill in the economy not keep pace with inflation. And so I think that there's going to be a lot more pressure coming from labor for wage hikes just to get even with the inflationary pressure that we've seen over the past year and a half. And look, when I look at unit labor costs, when I look at the core measure of CPI, when I look at these alternative measures of core or underlying inflation, trimmed mean, weighted median, underlying inflation gauge, those to me all seem consistent with a pretty sustainable 6% core rate of CPI growth. And that's not 2%.
It's time now for.
Oh man. And I think what he just said right there about wage inflation also makes a lot of sense. Hey, just bought Palantir at 15 Palantir shares, not bad. 14 shares, bought $75 more of Tesla. Man is so upset about the student loan thing that yeah, I don't think the student loan thing necessarily exacerbated it. Like to say Biden's, we haven't even paid for the student loan thing yet, right? So like the fact that I don't think that's going to destroy inflation. That's not the best for inflation, but it's not like it's the reason why everything is going on right now. This is incredibly interesting. Let's go back into the report. Let's look a little bit about well, first of all, let's go into the market. I haven't seen the market in a second, and then we're going to go back into the actual report. Wow, man. Wow. Okay. The food index increased 0.8% in August, and shelter costs, which make up 1/3 of the weighting in the CPI. Wow. So that's shelter dropped 0.7%. That's more housing. Medical care services showed a big increase, rising 0.8% on the month, 5.6% from August 2021. New vehicle prices also rose, right? Increasing 0.8%. It's interesting because Elon said deflation might be risked. And the whole reason people were reading into what Elon says is because he sees all the supply chains and commodities because he runs Tesla. And so if someone like him says, hey, inflation might be deflating, he might know something the rest of the world doesn't know. And I mean, maybe that's still true, but maybe that's also not. Today's CPI reading is a stark reminder of the long road we have until inflation is back down to earth. I think that's the best quote we could have heard so far. It is a reminder of a long road. We don't get rid of inflation that easily. It's like Turkey has 80% inflation, right? Like it's something you have to control, but it's not something that you control that easily. Wishful expectations that we were on a downward trajectory and the Fed will lay off the gas have been a bit premature. That means that if the Fed is not laying off the gas, because we can't have gas prices go up, I have to throw that in there, then that means tech valuations and tech stocks will get demolished. It's just that simple. Rising interest rates are not going to help them. Even if the market bakes it in, there's only at some level, if it costs 5% to borrow money and you're a DraftKings and you don't have $2.4 billion on your balance sheet, like Palantir does, by the way, so it shouldn't affect them too much, even though the macro will still affect them, then borrowing money is going to be really expensive when you got to pay 5% interest on it. And that's not good for a tech stock. And tech stocks need to borrow that money because they are focused on growth now, profits, and cash flow in the future. And so the question becomes, how much of $1 per share are you willing to pay in order to get growth in the future if the company has to borrow money at 5% right now? Like it's a different world in terms of how it works. Markets have been widely expecting the Fed to enact a 0.75 basis points. So 0.75 is almost guaranteed. That's what we're going to see. After peaking above $5 a gallon this summer, gasoline prices have pulled back sharply. The cost of living in other key areas such as food and shelter continue to push higher. Within the jump in food costs, bread prices rose 2.2% month over month. Wow, look at this. Bread is up 16% from last year. So if you go buy some bread at ShopRite, it's up 16% from what it was like. Eggs are up 3% and up 40%. Oh my goodness. Wow. Did not expect that. Did not expect. The Fed is hoping to slow labor market, blah, blah, blah. Yeah, and obviously this has resulted in rising wages as well. And how that's working. Okay, let's look into stocks. Let's see where stocks are going. Let's open up Webull. Zoom at a 52-week low. Hey, Mitt, Fox. Hey, thank you for being here. Uber down 5% at $30. SoFi 609. I just picked up 40 shares at 601. So happy I got it on. It seems like a little bit of the bottom now, but honestly, I wish it went even lower because I'm ready to keep going. I'm absolutely ready to keep going. Let's do this. Let's buy more. Like, yeah, and I've got some dry powder. Put it in the chat if you've got some dry powder. The reason I wasn't buying in June, even though I should have bought in June because it was the bottom, but the reason I wasn't buying for the past couple months is because I was like, I'm going to wait till it's time to really buy. I don't know if it's time to really buy yet, but I also think the market is, like just looking at it today, there's some stocks that are oversold. SoFi is oversold. Palantir is oversold. We're going to see, how much lower it can get. Google, I want under 100. I know getting Google under 100 is going to be hard, but I don't like it at 108. I want it a lot lower. Path is there. DNA. Where's DNA? Oh, DNA is back at 3.2. It was at 2. Hold on. Let me check it on my app. I was thinking maybe I just start a position in DNA today as well, even if it's like a $300 position. But it rallied right back up. It was down to $2. I think I can get DNA for like 2.9. So I'd rather wait on that as well. ARK at 43. Best Buy at 75. Spotify Spotify got hit. It was at 111. Spotify's high was 387 back in Feb 2021. In November 2021, we were at 295. And it got 103 today. It got hit. Bed Bath & Beyond. Where's BBBY? 871, down 5%. Where's AMC in all of this? Let's look at the apes. 975, down 5%. So AMC is also not immune to any of this stuff going on. Big payday tomorrow, 100 hours of dry powder incoming. That's great. You're going to have some more money. You can be able to put it out there. Crypto taking the biggest hit. Let's go to Bitcoin. I haven't even checked out Bitcoin in a minute. All right, what do we got on Biddy? Bitcoin. Where's Bitcoin? Where is Bitcoin? BTC. Here we go. Okay. 21,000. So, it's not doing horrible given, it was at 18,000 in September 7th. So it's not the worst it could be doing, but it's also not the best. Let's go to ETH. ETH is also 1,600. Again, ETH was at 1,400. Yeah. So, it's bad, but it's not horrible. I guess the market's kind of the crypto markets are baking in that. Again, rising inflation theoretically is good for crypto, even though they perform like growth stocks. But the idea is I hate to use this word, but hedge against inflation. We know they're probably not. And if they're a hedge against inflation, then that's a good thing at the end of the day, because, well, that means that it's a better way to do. It's a better monetary system because there's limited supply of it. Now, is that actually true? I don't know, but nonetheless, that's what it is. All right, let's look at another video. Let's pull this up as we end down the stream, and let's see what else people are talking about. So let's look at I actually want to hear about do I want to hear about the Twitter thing? Let's hear about the rental markets. I think this will actually give us another perspective as well. So let's pull up this one. We still have a global trade war in place. Yeah, that's also true. The Russia-Ukraine stuff is not over. And if that's not over, it's hard to act like everything's fine on that.
Red hot rents we've been seeing and signs a fall chill may be coming. Diana Olick joins us with more this morning. Diana.
Well, Andrew, apartment rents are still rising across most of the country, but the gains have now finally fallen back to much more normal level. Asking rents for new leases rose 0.4% from July to August, according to RealPage. The gains were 5 times that at the same time last year. Pre-COVID, the average monthly rent increase in August was 0.2%. Rents in August were up 10.5% year over year, but that's down from nearly 16% annual growth in March. Just 17 of the nation's largest 150 markets saw annual rent gains go up. Unlike the for sale housing market, rent demand is still strong and landlords still do have some pricing power. just much less now. There are, however, some markets that are raising red flags. Phoenix, which really overheated recently, saw asking rents actually fall in August, the first month-to-month decline since May of 2020. The same holds true for Las Vegas. Several Florida markets like West Palm, Jacksonville, Tampa, Fort Lauderdale, and Orlando are also seeing faster moderation in rents. These are all markets that saw rent gains in the 20% range over the past 2 years. Markets not seeing any slowdown are those in the Midwest, which didn't really see any big gains either during the pandemic. Joe?
One of the things that's interesting there is this idea that rents are decreasing in certain places and not and increasing in other places. So if you go down to the South, it's decreasing month over month, places like Felix, where if you go to the Midwest, it's not. Now, why is that important? If you're someone like Meet Kevin, who's launching a real estate startup right now, and there are underpriced opportunities to be able to find these wedge deals, for example, this might be a good time to start at least looking for these things before we get an absolute bottom or before we get or if we're nearing into the point where rent is starting to increase in certain locations over other locations. I have a podcast coming out today with Sean from Invest to Live, who I would classify as an absolute real estate expert who is breaking down the entire startup that Meet Kevin is building. And I think you guys are going to enjoy that one because that was it was a pretty good interview just breaking down what he's doing. Chris says, bro, it's a bloodbath in the Southeast. Yeah, I would imagine that's what it's kind of looking like, right? Just like from how prices are trending. And that's going to be interesting because there's going to be a lot of opportunity there, but there's also going to be a lot of pain there. Last video we'll see for today. I want to hear about the Twitter whistleblower, and because Twitter stock price is still at 41, let's see what the opportunity is there and where the market is still expecting that to end up. Because in the midst of all this, we still have Twitter going on.
The Judiciary Committee is holding a hearing this morning to examine allegations of widespread security failures at Twitter. Eamon Javers joins us now with more. In like a three-piece suit, no Lululemon, that's for sure.
I got to see your Lululemon pants in person last week. That was great.
We want you on the wall. He said that. You want a person like me on the wall.
You need me on that wall, Joe. You need me on that wall. The standards of civilization will collapse. We got to hold the line here. Let's talk about today up on Capitol Hill, though, where nobody will be wearing yoga pants. We're going to hear in person today from Peter Zatko. He's the Twitter whistleblower. He goes by the nickname Mudge, and back in August, he filed complaints with the SEC, the FTC, and the Department of Justice, alleging what he called deceitful and or misleading communications affecting board members, users, and shareholders of Twitter. He focused on four main criticisms of the company: a lack of basic software security, too much access to sensitive data by employees throughout the company, internal process issues, and security incidents impacting a large amount of user data. But maybe his most damaging allegation was that executives at the company had been deliberately misleading Twitter's own board about the problems at the company. Now, the dramatic testimony we expect before the Senate Judiciary Committee at 10 a.m. today comes against the backdrop of this struggle for control of the company, with Elon Musk scrambling to get out of his $44 billion acquisition attempt and the Twitter board seeking to hold him to it. Twitter initially sought to minimize Zatko's allegations, calling him a former executive who was terminated for ineffective leadership and poor performance. Twitter called Zatko's allegations a false narrative, but Musk has sought to use his allegations to bolster his bid to get out of taking over the company. He changed his mind about that earlier this year. And guys, I think we can also expect Mudge to be asked about his big settlement with Twitter this year. The Wall Street Journal reported that Twitter paid him roughly $7 million in June in a settlement over lost compensation and his departure from the company. He signed a non-disclosure agreement at that time, but whistleblower complaints and congressional testimony are exceptions to that agreement. So you can see he can talk freely today, and you can be sure that members of the committee are going to want to ask him all about that, guys. Back over to you.
I think the market's looking at Twitter and saying, even if even if this guy has like whistleblowing and all this stuff, there's some deal that has to get done, whether it's $1 billion sort of negotiation thing or whether Elon buys it, even though it's looking more and more likely that Elon's not going to buy it. But it's the market's not recognizing that yet because they're still keeping it at 44, right? They're not betting on it. Like the market should be recognizing Twitter at like 35 or something if the deal doesn't get done, because the intrinsic value of Twitter is not good. Sam, what's up? Thank you for being here. So it's weird. The Twitter thing is very weird, keeping it at 41. DRK, thank you for being here. The Red Sea has returned. It has indeed. All right, we'll do one last check on stocks, and then we're out for today. Let's just see where the major stuff is at. AMC at 969, SoFi 609, Palantir 756. Things are, it's not going lower than what it is. So Tesla 295, not dropping too much lower. ARK 43. Where's the S&P? S&P 401. All right, so we were at 390. It looks like we might just head right back down there. So that's what we got. The Nasdaq is at 11,000. So the bottom here, I remember, was 10 grand June 16th, right above 10 grand. And we rallied up to 13, right back down to 11. Now we're up a little bit. Now we're down right under 12. So the market's reacted. The market does not like inflation. They think it's going to be hard to get rid of it. And ultimately, we're going to see what happens. All right, everybody. I'm done for today. Thanks so much for watching. I have an interview with Sean from Invest to Live coming out a little bit later today, so please watch out for that. I'll be doing the market close as well, and then late night stock talks tonight around 10:30, 10:45. So we'll see everybody there. Thank you so much for joining. We'll keep following up the news, see what goes on with inflation. And these prices are good. At the end of the day, for me, I'm like, all right, it sucks, but these prices are good, and I'm ready to buy more. So thank you, everybody. I will see you later throughout the day. Bye-bye.